something like money?
Welcome to another episode of Practice Prosperity. We have a special guest, Lorin Hamilton, and she is an accountant for the therapist. I'm a big believer in niching down, and we're going to see in real time what the value is of niching down, super serving a segment of the population, and what that can mean. And I work with a lot of therapists in my practice as well. So I have a lot of questions about what they can do in their accounting. So this is going to be I think, a logic filled value added episode. So, Lauren, thank you very much for joining us.
Yeah, no, absolutely. Thank you for having me. I'm excited to be here today.
So, to start us off, if you don't mind introducing yourself, your firm, and the type of clients that you serve.
Yeah, absolutely. So like I said, I'm Lauren. I've been an accountant for a little over 15 years, which when you say that out loud, sometimes it's hard to believe. But I am located in South Carolina, although, I service clients from wherever, but I do work exclusively with therapists, private practice, group practice, all those things in between, and just helping them with their accounting and taxes. So, want to be their support system for that. And like you said, niching down, I have a kind of a side passion for mental health, and working with therapists has always been really fun for me, and want to support that group of people because I believe very strongly in the work that they do and want to help them succeed. So, yeah.
So, you, like me, have a Southern accent. And when we walk around telling people, yeah, a lot of our clients are mental health professionals, they look at us strange. They're like, are we their client? Like, how is it? What is it like telling people these are the population that I'm serving?
Yeah, like you said, I do kind of get kind of a mixed bag, even from my family, just on a personal level. I had to, kind of explain, no, it's, like therapist, psychologist, that kind of thing. And really, like I said, really focusing in on that group of people because and I'm sure as you know, in talking to that type of people, as accountants and financial people, we're very, you know, left or whatever side of brain we are, but we think of things in a more logical view, whereas I find, the mental health professionals don't always, and so that to them is very scary and overwhelming. And so being able to partner with them, I find is really fulfilling. So yeah, so that's usually how I explain it to people is, like I said, the work that they're doing for their communities and, the world and all that is good stuff. And yeah, so I want to be able to help support their business on the more logical side.
I 100% agree. I have clients of different professions, but there's a different type of appreciation mental health professionals provide us because we do love the numbers. And that is something traditionally they have not been inclined to.
Yes, exactly. And they really struggle with it too. And I think, as they're going through school and their clinical schooling and counseling and that kind of thing, they don't get that part of the education. And honestly, I mean, it's not just counselors, it's a lot of, professions. People don't get financial education and, how to even balance a bank statement type of thing, which I think everybody should probably know, not just therapists, but they do get very overwhelmed with it. And at least I find the ones that I have been working with, and to be able to help support them and walk, alongside them with that, they are very appreciative of it. And I think they realize the value of having a support system because they themselves are a support system to somebody else too. So I think they get it.
Yes, yes. So let's roll up our sleeves.
Okay.
We are in the part of the year where tax deadline is approaching. Um, let's talk about a little bit about taxes. What are some of the big mistakes you see therapists making when it comes to getting their taxes done, preparing for their taxes? What are they missing?
Yeah, so honestly, the biggest mistake is waiting until now, like waiting until April to actually think about it. And, at that point, it is. sort of too late to plan ahead. The planning ahead stage has long gone. However, you can start planning for next year or like this year, the year that we're in now. So that's really the biggest mistake is really just not even thinking about it until now. I find it's a lot easier to and to not make a mistake. And not that, accounting is not brain surgery. So if we make a mistake, it's not gonna, be the end of the world. But so we can always fix things, and that's, always a comfort as well. But to prevent that from happening, it's a good, practice to make sure your books are updated. And, when I say books, I mean, your accounting as far as what money is coming in and out of your bank accounts, what you're spending your money on each month, and then looking at that quarterly. So that way you can stay on top of your quarterly estimated tax payments because, the IRS actually sets those dates out, and that's a real thing. It's not just something we kind of made up in in accounting world. And those dates are actually set by the IRS, so that's something that we try to work towards each quarter, so that way we know what we're paying in each quarter.
Yeah, I think a lot of people have the misconception of, you being an accountant, me being a financial planner, that we don't want you to spend. We kind of actually do, because that's when we add the most value. If you're spending on something that's growing your business,
Hmm.
we win, you win, everybody wins. And I think what you're alluding to is don't wait till April. It should be January 1st of the year before.
Yeah,
You think
yeah.
about how you spending, because it may not be mathematically correct, but I see is spending money as almost having 30% off to 20% off on items that I buy for my business if I do them in the right way.
Right. Yeah, no, exactly. And honestly, that's why we all get into business anyway. I mean, we all have to make money somehow because we all have bills that we have to pay. And let's make sure those bills that we are paying are at least for something that we're enjoying and something useful. So yeah, you're right. Yeah, looking at that ahead of time instead of just at the one time of year is a lot better.
So we're on social media a lot, and anybody owns a business, you're probably down in this angle of the algorithm where they say you need to have an S corp, get an S corp, all this stuff. But let's really break down, when does somebody need to go over to an S corp? And is it a revenue number? Is it an income number? Like below, above? Like help break that down for us.
Yeah, yeah, absolutely. So typically, I start to have an S corp conversation when if it's a sole member, practice, if it's a solo owner, right around the point where their net income reaches around 60,000. So that is below the line. So after, total income and all of your expenses have come out and you're at around 60,000, that's generally when we would start to have an S corp conversation. And what that would kind of where that triggers, or I guess that number triggers, is it is kind of sort of a break even point between the time that you've got to set up payroll, because once you're an S corp as an owner, you have to put yourself on actual payroll, and so there's going to be expenses, for payroll processing, and then salaries and taxes and all the stuff that does come with payroll. So usually when you hit that 60,000 mark is kind of a good break even point. Obviously, you'd want it to be more than 60,000. But yeah, that's generally the point when we would kind of start to have that discussion and think about, well, what's the future going to be looking like? Do you expect to have this income level going forward, or should it be increasing, and that kind of thing? So yeah, that's a good target.
And just to be clear, so this is $60,000 profit. So after on your Schedule C, everything is deducted. There's $60,000 remaining to be taxed. Um,
Yes.
this is a tough question, but for the typical practice owner to make $60,000 after all home deductions, everything your creative accounting imagination can put on there, what revenue number is that, so they can kind of really see get an idea. So 6,000 net income, but usually what revenue manifests that $6,000 in net income.
Yeah, I mean, obviously it's going to depend for, each individual situation, but typically if you're reaching around 80 to 90,000, because you would assume that your expenses are around maybe 20 to 30,000 at that point. And so yeah, so I would say 80 to 90,000 in total income.
And I'm kind of, going through the tea leaves here. So really what we're comparing, I believe, is the benefit of reducing your self-employment tax with the fee a payroll provider and an accountant would cost for that incremental charge. Is that what we're really comparing?
Yes. So, even though you're an S corp, I mean, you're still going to owe tax on the money or, like your net income. However, you're offsetting it more with business expenses such as the payroll and, accounting fees and processing fees. But at the end of the day, too, you're also now going to be taking home a salary that counts as a business expense. Whereas before, as a Schedule C, solo member, any distribution that you take out, I mean, it's still income. So, whereas now, if you're, an S corp and you have that salary, that's counted as a business expense along with the employment portion, or I'm sorry, the employer portion of the payroll taxes on that. So, yes, so we are trying to, I guess, creatively just kind of redistribute the income so that way the tax liability is a lot lower.
That makes sense. That makes a lot of sense. So everybody listen, if at the bottom of your tax term it doesn't say 60,000 as far as your Schedule C or the schedule of the profit, or is it 6,000 AGI? Is that a better?
Yeah,
Okay,
yeah, that's
so
probably a better
probably the
way to
easiest
say
line
that.
to find. So if $60,000 of AGI or more, that's when the conversation really begins. Now, I do have to ask, there are some, not so positive things going from Schedule C to an S Corp. What are some of the things that business owners may miss out on making that transition?
As far as like staying a Schedule C, or
Mm-hmm.
yeah. So, yeah, obviously your tax liability is going to be a little bit higher, because the you're going to pay self-employment tax, and then on top of that, whatever tax bracket you're in. Obviously, if you're an individual, like a single individual, the tax will be a little bit, different compared to if you were married and have dependents and that kind of thing. So it really is a case by case thing. So really, that's the main thing. And then other things would be like kind of like with your profession is retirement planning. There are some things that you can't contribute to if you are an individual business owner, whereas if you were an S corp and had payroll, you might be able to contribute to some other plans.
That's correct. Spot on, spot on.
Yes.
So the biggest thing folks look for around this time is deductions, but it's usually too late. What are some overlooked deductions that therapists, traditionally don't think about that, hey, that is deductible. This is something you should be tracking.
Yeah, I actually had a conversation with somebody the other day, and they were saying that they do work out of their home. However, they don't take any of their, home expenses as a business deduction. And, that created a whole nother conversation. But that is one thing that I think people maybe misunderstand or don't understand fully. But if you are somebody who works from home, fully or even, part of the time, you can legitimately take those items as a deduction. And there is a calculation involved with that. I mean, so it's not like the IRS says, yeah, take your whole mortgage interest as a business expense. So there are some limitations to it. However, it is a legitimate expense. And if, you do it properly, the IRS, you know, has rule or, has regulations for that. So So that's one that I see a lot that either is just misunderstood or maybe people are just scared, like, I don't want to use it because I don't want it to be like a red flag for an audit. Um, and then the other is continuing education, which always just kind of puzzles me a little bit because, as therapists and license holders, obviously there's going to be continuing ed requirements. And so I don't know if it's just a conception of because it's required, it's not something that I'm willingly going to do, sort of thing, or I don't know what the disconnect is, but those are legitimate business expenses. So if you're going to conferences and if you have to travel for the conference, that travel expense is also a legitimate business expense. So I think just having those conversations more about what all is involved in that continuing ed piece, not just paying for the course.
Mhm.
Those can also get overlooked sometimes too.
Let's break down each of those. So for a home office deduction, what are some key elements I need to have to, have adequate documentation? So if I am audited, hey, I have proof and backup.
Yeah, so and honestly, I mean, the IRS really does have like a whole list of what you can and can't do. But the general idea is that if you have a office space, and it can't just be like I use a TV table in my living room on my sofa, like to do my work. It has to be a dedicated workspace in your home. And you can take the square footage of that workspace. So, whether it's like a spare bedroom or you actually have an office space, like a room dedicated for your office, you can take that square footage and then compare it to the total square footage of your home. And so that gives you a percent. So, with that percent, you can then take utilities. So, that would be, like electric, water, gas, internet as well. And then if you own your home and you are paying mortgage interest, you can take a portion of that. And you can also take property taxes that you might be paying on your home as well. So all of that, combined, and then taking that percentage is usually, I mean, depending on where you are locally, it could add up to, at least a few $1,000s, if not more. And so that's a really good business expense because you're not paying rent. You're not like going out somewhere and paying someone rent. So instead, this is kind of like your rent expense because you're using your home for your business.
One thing my accountant told me that I was really upset at. You can't write off your HOA. I'm like, what do you mean? That defies all economics and accounting that I've learned. Like it's part of the home.
Yeah.
Why? Why? I told her to write a letter to the IRS, but why?
Yeah. I was going to
Why?
say
Why can't you do the HOA expense?
that's just one of the things the IRS has in that regulation note. So, I mean, yeah, I won't get into too much of that, but yeah, it's it's just the rule.
Yeah. The next thing you mentioned, which would probably interest a lot of folks, is travel.
Yes.
People want to travel on discount. But what are the things that need to be in place? The similar to the home office to make sure that this travel is regular business activity.
Yeah, so and I stress this a lot, but one thing is making sure you are paying those expenses on a business account. So don't like take your personal credit card with you and just, buy things and then try to reimburse yourself for it. That can be a real red flag because, if you ever were audited, the IRS one doesn't want to see personal and business expenses mixed up in one account, but it's going to look fishy to have, oh, I went, here and I used all of my personal accounts to pay for it. Whereas if you used a business card, obviously it's going on a business account. And so that way, when you're looking at your statements and categorizing everything, you're not going to miss any expenses. And that's true not just for travel expenses, but So when you are traveling and using, a card to pay for things, make sure it's a business card. So that's one thing. But then the other is just documentation that it was a legitimate business travel. So obviously, if you're going to a conference, I mean, you're going to have a receipt that you've purchased a conference ticket. And, it's completely reasonable to have somewhere to stay and have and somehow travel there, and you have to eat while you're there as well. And, what if you have networking dinners or anything like that, that maybe you're, going out with a group of people from the conference to, network and socialize and that kind of thing. I mean, that's important to have documented as well.
Yeah, I think that's good. I think, like I said, documentation, keeping things separate. And when we're talking about keeping personal and business separate, I'm a financial professional. The temptation is there.
Yes.
Pile of money over there. I want to do something personal, but I can't. So, how do you recommend folks maintain that separation?
Well, just keeping a separate bank account for each. Obviously, as a business owner, you want to have a bank account for your business. That's just kind of this, how we set things up. But if you do want to buy something personally and you want to use business funds, don't use the business card for that. At least make a distribution to yourself so that way it can count as a shareholder distribution, and then you can use that money once it's hit your personal account to then purchase whatever. Again, because I've been in accounting for 15 years, I've seen all kinds of things, and all kinds of stories about, well, I was, over here and blah blah blah. And anyway, I could probably write a whole book about stuff, but But the cleanest way to do that is to, if you need the money out of your business for a personal thing, is to just distribute what you need, from your business account to your personal account and then use it on the personal side.
I think the biggest asset for me was having a personal credit card and a business credit card.
Yes.
And that way you can reconcile cash flow afterwards, right? But that has been a real asset for me.
Yes, absolutely. And it's important to, like I said, to keep those things separate because you could, mistakenly take some personal items and categorize it as business. And again, if you are audited and the IRS finds out about it, then that's not good. But it just helps keep everything organized. And there's nothing more that an accountant wants than to have things organized. So it just keeps it nice and tidy. So.
So I have these separate accounts, and let's hope that we're keeping them separate, no crossover. How am I supposed to track my expenses? So these transactions are happening, but how am I tracking? How I make sure they're allocated to the right spot? How do you help your folks do that?
Yeah, so it kind of depends on where they are in their, practice journey. But if you're just getting started and you're again just a single or solo owner and have maybe a checking account and a credit card, I would just get started on a spreadsheet. I mean, it's just a matter of getting that information on a list somewhere and just start tracking, gosh, I'm spending a lot at Staples for some reason. And then you realize that you have that HP instant ink on, on a reoccurring draft that you really don't need. So you'll find things like that, but you'll recognize patterns. You'll know like, oh, my insurance payment is coming up because it's an annual premium. So just get it listed out. So that's where I would at least start if you're just getting started. Now, if you're at the point where we're talking about becoming an S corp, or even if you're reaching like 40 to $50,000 in revenue, get on a software system. And that would be something like QuickBooks or Zero. I don't have any affiliation with any of those products, but that way you can link your bank accounts to it. It will, import all the transactions in there. So You won't miss anything. And then obviously you can go in and categorize it and set up however you want to see your reports and get a little bit more detail that way. And especially if you're going to work with an accountant like me, that's something that I would kind of require.
So I think that's interesting. So I'm a big believer that if folks have money allocated, they will be more responsible with spending it in the right way. And I believe the same thing with time. How much time should a typical therapist spend massaging the numbers and analyzing the numbers? Like what is a healthy amount of time?
Yeah, so I personally think it's best to sit down once a month and, whether that be at the end of the month or the beginning of the month to look at, the previous month. But and take and, set aside about an hour. It's probably not going to take an hour, but just to give yourself that time and really go through and look at, does it make sense that I spent this much this month? And then thinking about, what do I have coming up next month that I kind of need to be prepared for? And then also in the back, also, thinking about taxes and setting aside that amount, or, saving that amount that you might need for your quarterly estimates. So I think getting in that cadence and that rhythm really helps, because it can snowball. Because if you miss a month or two, then you're going to be playing catch up, and then at that point, you kind of, the ball's ahead of you, I guess, so to speak. So yeah, so I think just doing it once a month, it's not something that you have to do like weekly or daily or anything like that. If you're doing that, that might be a little bit too much. But yeah.
What trends should these practice owners should be looking at? Should they be making sure that their, certain expenses aren't going above? Like, what are some warning indicators that I need to reel it in, or maybe I'm spending too much? What are those things?
Yeah, I think a lot of times, especially like with subscriptions and softwares, so I think there's a lot of boards and associations that therapists can be a part of. And while those are good and, legitimate expenses, I would just take the time to, think through, is this is it valuable to you to be a part of some of these associations? Because some of them they may not, and some, I think they're a pretty low monthly expense. So maybe you just kind of continue to stay on it because it's not that much money, but it does add up over time, and you could be using that, for something else. So that's one thing that I do kind of see a lot, is a lot of subscription based things that, you know, I don't know if it's completely valuable or not, and maybe it is, but so that's one thing. Software is another big thing. Obviously, they need to have their EHR software. And if that's not, providing everything that you need and taking the time to research maybe other ones, they're always, and it's not just, in that section, every software is always updating, and so every business owner is always like, oh, now I got to find something else now, because the newest and bestest thing is out on the market now. So so yeah, so that's those are kind of the big ones that I usually see.
Yeah, I agree. Even in finance, we have so many associations you could be
Yeah.
affiliated with. I even had to take a step back. It's like, which ones are adding value?
Yeah.
Which one are moving the needle, and which ones can I come back to later?
Exactly.
The same way with software. I mean, some things it's a nice have in the moment, but do you need it? I don't know. That's for each
Yeah. Yeah.
business owner to
Exactly.
decide. So one of the big things is paying taxes. I didn't know before I got into this business that people owe the IRS and how much they owe the IRS. And if they had a strategy on how they pay their taxes, it would be beneficial. So, how do you advise your therapy clients to pay their taxes?
Yeah, so kind of like I mentioned before, but really, if you're staying on top of things monthly, meaning like if you're looking at your numbers monthly, um, then at the end of the quarter, which are every 3 months, looking at your total net income for that. and then really taking a percentage of that, which, you know, we normally say 20 to 30% just as a conservative number for a tax estimate. And obviously, everybody's situation is different, and everybody's tax return is different. It's kind of like a fingerprint. We all have our individual tax return. So just as kind of a general rule, it's 20 to 30% of your net income. And then I actually did a video on this because I didn't, because I know how to do it. I didn't really realize that nobody else knew how to do it. But you actually go to the IRS.gov website and pay your estimated taxes. You can, actually make a check payment. I would advise not to do that, only because one, mail takes forever now. Things get lost in the mail. The IRS, I mean, honestly, has probably not even caught up since COVID. So, anyway, it's a mess over there. But we won't get into that. Yeah, so just paying it online, it's paid. You can also set a draft date. So if let's say you wanted to set up the payment today, but you don't want it to draft from your account until the 15th, you can tell it to do that. And then also, a lot of people forget about their state taxes. If you're in a state that has income tax, obviously not all states have income tax, but you'll want to make a payment towards that as well. Again, depending on your tax situation. And most states now have Department of Revenues online where you can go online and make a estimated payment that way too.
I think that's and it is intimidating the first time you do it, making a payment because it's usually not a small payment, and you
Yeah.
want to go to the right person, and nobody wants to see what they call those an exception letter in the mail.
Yeah. Yeah. Any
Nobody.
letter from the IRS is not it's not fun.
I remember I received a letter in my PO box, and I just stared at it for 5 minutes before I opened.
Yeah.
There's
Yeah.
nothing good that can come from this.
Yeah.
Okay. So we have business owners separating their business and personal. We have a way to track it, and now we're paying estimated taxes. Now we have to pay ourselves. We have to pay ourselves to live our lifestyle, to do the things that we love. Any thoughts on how these practice owners should pay themselves?
Well, and this kind of comes down to like a cash flow conversation, really. And I guess what I mean by that is just because you have like $5,000 of income doesn't necessarily mean you have $5,000 in your checking account. So, you kind of have to think through that a little bit. And if you're, a solo owner as a Schedule C, it's really whatever distribution you take out of that you need personally is is just kind of up to you and how your personal expenses are. Um, Obviously, you can't take more out if you don't have it in the bank, but you do also have to make sure that you're going to be able to pay your business expenses because that money is there to pay those as well as your personal expenses. So there is a little bit more of a strategy there as far as, the income that you're bringing in versus the expenses that you are paying, and then what is actually left in your checking account at the end of the day. So just kind of thinking through that. But then if you're an S corp and, as we had mentioned, as an owner, you're set up on payroll and you have to take a salary. The IRS does have rules and regulations on that too, as far as what is a reasonable salary. So, would you hire somebody to come in and do what you're doing in your practice for $40,000? Probably not. Like who's going to work for $40,000? But you also can't then say, well, my salary is going to be $200,000. That's not reasonable either. So you do have to think through what is your income coming in for the business and then thinking about what is a reasonable salary for what I need personally and then also what the business can afford, or what does it make sense if you were to hire an equivalent person, and what would you, have to pay them according to your market wherever you are. So.
Makes sense. What helps you sleep at night knowing that your clients have in cash in their business account? Is it like 2 months of operating expenses? Like what amount do you see work?
Yeah, I mean, at the very least, you would want to have at least 2 to 3 months. I mean, that's that's even probably pushing the comfort level. But ultimately, you'd want to have at least 6 months saved. Just because, and with therapy practice, they have busy seasons and slower seasons too. So just kind of making sure that you understand that for your practice too, and that's another way of, when you're tracking trends and looking at patterns and being able to organize your accounting, you'll know that, okay, the last part of the year isn't as busy, but then January really picks up because, all the, or it's the other way around, but all the deductibles, start over for insurance. So January and, February are usually a little slower. So just knowing that. So if you know that, you might want to have a little bit more money in the bank to be, because those expenses are going to keep coming whether you're making money or not. Especially if you have employees too. We haven't really talked about that some owners that may have, a couple of people on payroll as employees. And they still have to get paid.
Mhm.
So, so yeah, so just kind of making sure that you're keeping up with the cash that you need in those slower times.
Somebody once told me if you want your employees to instantly begin looking for a job, miss a payroll payment.
Yeah, yeah, it's
That is
not
the
good.
quickest way to stop any type of loyalty.
It's
Um,
not good.
we touched on this beforehand, but let's go into it. As business owners, we do have some investment or retirement accounts that we can utilize. What have you seen your clients utilize to help build wealth outside of their practice?
Honestly, not a lot. I mean, at least the people that I'm working with, and that's something that I, advocate for, because, as business owners, I think that part often gets overlooked,
Yes.
because, we're more the upfront, or the things that are in our face more are those things that are daily, and, being able to meet living expenses. So, but when you are at a point where, not necessarily growth, but you're feeling stable and comfortable in your practice, that is a good time to have those conversations. And like we said, that's a legitimate business expense. So again, that's going to lower that tax liability for you, especially if you are an S corp, because it counts, contributions from the employer count as a business expense. So yeah, so just talking through what those options are and working with somebody like you, because to be honest, that is not a very big strong point of mine, is knowing what those options are, other than, knowing that there are limited products that people can use just depending on how they're set up.
Gotcha, gotcha. That makes sense. So, who gave you the advice that it would be wise to niche down to a particular population? Like, where did that idea come from? Did it come from inside? Was it some whisper at night? Like, where did that come from?
Yeah, no, there's a saying that goes that floats around, I think, but that the riches are in the niches. And I think, because I have been in a public counting before, I've worked with all kinds of businesses, whether it's, it could be manufacturing to retail to dentists and, or lawyers and that kind of thing. And so each industry has its own cadence and its own language. And I think for me, and being a solo owner myself, and being the one that, you know, talks to people and or talks to my clients and being able to have those conversations. I wanted to really specialize in that to be able to, you know, give them the best advice because I know that, five other therapy practices do it this way and they're having success at it. And so being able to give somebody that advice on, their practice that they're, either, going through a hard time or, needing to have that growth conversation. So being able to have that knowledge. But it is funny that yeah, I don't know why I really picked mental health professionals other than I do have, outside in my, free time, I read a lot of mental health books and and honestly, accounting uh is almost like being a counselor yourself. I mean, a lot of people have a lot of financial fears and a lot of shame around money and not knowing things and being able to really, be a place for those, conversations and to not be intimidating and really, support people through that. So yeah, and I just think, being able to talk to a counselor, like they're just comfortable to talk to because they're a counselor. So, so I enjoy that part of it too. I did have one of those, I guess like shower moments, I guess, when I was thinking about what to name my practice. And it just kind of came to me and I was like, oh, open books, like accounting books. And we're all, open-minded people. So yeah.
I think that's powerful. It's almost like if you had a client, they said, "Yeah, we're going to go gangbusters in January." Well, you can say if you're dealing with adults, that may not be the time where the revenue is the highest. So you may want to
Yeah.
slow down on Christmas, and that can make or break whether that business succeeds.
Yeah, exactly. Exactly. Yeah, so just knowing that industry trend and knowing the language too, and really understanding, and kind of like I said in the beginning too, really understanding that a lot of therapists and just people in that space are very shy and do kind of carry a lot of shame around not knowing how to run a business, and so being able to say it to them in a way that they understand. Whereas, when you talk to doctor or lawyers and, retail people, it's a different conversation. So they're looking at different things than a therapist would. So
Yeah, I agree. And I've also noticed that because they were in school so long, they have, I guess, incremental shame and when it comes to money because they've seen their peers do different things. Well, they were still in school making a school in school salary.
right, right. Yeah,
Um,
exactly.
that really hits. So that's awesome. So where do you see your firm in the next couple of years? Like, what does it look like? Are you going to have other EAs under you, or like what do you see the next couple of years for you?
Yeah, I don't know. I haven't, I don't have that in my plan as far as hiring any other accountants just yet. I really want to become a good sounding board for therapists and want to, create a lot of good relationships with people. So that's really what I'm focused on is, like having a relationship with you and then also, just other people in this industry that, again, because I think as a support group, we all, do our special skill and together we all need to come together to make everyone successful. So that's really kind of my focus is making good relationships and then from there just being able to help more therapists with their accounting and taxes. And yeah, we'll kind of see what happens from there as far as if I'm going to need to hire anybody or not. But yeah, so far I'm enjoying being on my own. Like I said, I've worked in other accounting firms and other practices, my whole career. So this was a big leap of faith for me to go out on my own. But it's honestly something that I've always dreamed of. I took an entrepreneurial class in high school. And I just remember learning that, oh my gosh, you can really have your own business? That's pretty cool. And then obviously I loved accounting, so then that just kind of went hand in hand. So yeah, it's honestly been a dream come true for me to do this, and yeah, so I'm just going to continue to take it slow and grow organically, and yeah.
I like it. I like it. Now, this is practice prosperity. So, what does a prosperous business look like to you?
Yeah, so and I might have taken this a different direction, but to me, being well, what's the is it prosperable? I don't know what the right
Prosperous.
prosperous, yeah. Being prosperous just means to me that you have freedom and safety. And that's really, more of a feeling, but knowing that you have the freedom to do what you need to in your life, especially for me, I love to travel. And like currently, I'm visiting my sister for a couple of weeks because we don't live in the same area. So I'm able to do that and still continue to run my business. And but then also having safety of knowing that if something does come up, I'm able to handle that. And whether that's financially or, not. But so yeah, so that's being prosperous to me is having a very stable and being able to have freedom and safety and being able to live the life that I want to.
And I hope the people listening, they know the power of a niche. She understands this population. She feels for them and she can tell really their story. So if somebody's in the mental health space and they're saying, I need an accountant like that, somebody who's going to listen to me, who knows me, maybe help me out with seasonality and different vendors that other folks are using, like how can they reach out to you?
Yeah, absolutely. So the best way is you can email me directly. Or I have a webpage, openbooks.llc, and I have a lot of, free resources there. But you can also book a call with me. It's a free 20-minute kind of discovery call is what I call it, but we can talk about anything. So if you have questions or, if you've got something that you're trying to figure out, anything like that, you can just book a call with me and we can talk through it and yeah, see what we can do to help.
And the description, her details will be in the description. But do you mind sharing your website one more time, please?
Yes, so it's openbooks.llc.
Awesome. Awesome. That's perfect. Well, thank you for joining us today. You shared a wealth of knowledge. It is tax season. People have a little anxiousness about tax, but hopefully after listening to this, they could be more prepared to take home deductions, maybe travel a little bit,
Yeah.
as long as it's in regular business, right?
Yeah.
Processes.
Yeah.
But just be more comfortable. This doesn't have to be scary, and you have somebody like you out there that can go on that journey with them.
Yes, absolutely. And that's the perfect way to sum it up. Like I said, I want to be that support for people because I believe wholeheartedly in the work that they're doing, and I want them to be successful in that because we need it. We need mental health professionals in our communities.
Love it. I love it. So thank you for joining us. Lorin Hamilton, accountant for therapists. Please check out her resources. She has a lot of freebies on her website where you can get information on P&Ls. I think it's a valuable resource for any therapist. So thank you very much for joining me.
Yes, thank you.
Feeling the pressure? You're not alone. I'm Randall Avery with Diesel Wealth Management, and I specialize in simplifying wealth for those who are near retirement and business owners. We'll create a plan that fits your unique needs so you can actually enjoy the wealth that you built. We consider our firm results driven with a touch of fun. Ready for clarity? Click the Learn More and schedule your free discovery call. Let's build the financial future together.
The more I know, the more money I can make.